13.7%? That is all that is left, the lowest level in 7 years. And while you were watching red candles, $5.3 billion just moved into position. Bitcoin exchange supply just hit 7-year lows in January 2026. Only 13.7% of all Bitcoin is sitting on exchanges. The rest gone, moved to cold storage, locked away by people who have no intention of selling. Now, pay attention to what happened next. While that supply disappeared, one group was buying aggressively. 56,227 Bitcoin, $5.3 billion, exposed into a market that most people think is going nowhere. So, who is buying? Why are they buying? And now, and what do they know that you do not? Let me show you exactly what is happening on-chain, because the headlines are not telling you this story. Now, wait a second. Before we go further, you need to understand why exchange supply matters. Bitcoin on exchanges is liquid, available. One click, and it is sold. Bitcoin in cold storage is gone, not for sale. The owner has decided they are not selling at these prices, maybe not at any price. When exchange supply drops, any demand spike has nowhere to go except up, and right now, under 14%, the lowest since February 20th, 2018, 7 years. But that is not even the full picture. On Binance alone, the world's largest exchange, Bitcoin balances have dropped to 3.2%. In the last 7 days, 21,400 Bitcoin left exchanges entirely. That's nearly $2 billion walking out the door in 1 week. This is where it gets interesting, because this is not retail moving coins. This is not small wallets shuffling funds. Over the past few months, more than 200,000 Bitcoin has moved into long-term storage. That's $18 billion gone from the liquid market, locked away by holders who looked at the same charts you were looking at and decided they want more, not less. So the question becomes, who is doing this and why now? Santiment just released data that answers both questions, and the findings are not what most people expect. Since December 17th, wallets holding between 10 and 10,000 Bitcoin have accumulated 56,227 coins. That's the whale and shark cohort, the smart money, the addresses that historically front-run major moves. But it's not just the amount that matters, it's the timing. December 17th was the local bottom. Bitcoin was trading below 88,000. Fear was everywhere. Headlines were screaming about bear markets and cycle tops. Retail was panicking, and whales were buying, not selling, buying. They added over $5 billion in exposure while the market moved sideways, while you were watching price chop, while the mainstream media told you the bull run was over. That is not speculation. That is on-chain. Data verifiable, immutable. Every transaction recorded, every wallet exposed. You just have to look. Now the story takes a turn, because not all whales are the same. On-chain reported something extraordinary this week. 3 wallets, likely controlled by the same entity, bought 3,000 Bitcoin in just 10 hours. That is $280 million in less than half a day. Think about that for a second. Someone with access to $280 million looked at this exact market and decided this was the price they wanted to pay. Not lower, not after more correction, right now. And they are not alone. Wallets holding between 10,000 and 12,000 Bitcoin have been accumulating steadily since mid-December. Long-term holders, wallets that have not moved coins in more than 155 days, just stopped net selling for the first time since July 2025. That is a structural shift. The cohort that was distributing for months just went quiet. They stopped. They're holding. They're waiting. So if whales are buying and long-term holders stop selling, who is on the other side of these trades? You already know the answer. Sentiment's data shows that retail wallets, addresses holding less than 0.01 Bitcoin, have been taking profits over the past 24 hours. They looked at Bitcoin recovering toward 93,000 and decided this was a bull trap, a fool's rally, time to get out. Now, I need you to understand something that should make you furious. This is not an accident. This is not bad luck. This is how wealth gets transferred in every single market cycle. The same pattern every time. In 2017, retail sold the dip at 6,000 while institutions accumulated. Bitcoin hit 20,000 3 months later. In 2020, retail panicked at 4,000 during COVID. Whales bought everything. Bitcoin hit 69,000 18 months later. And right now, the same playbook, the same transfer. Retail selling at 92,000 because headlines told them to be scared. Whales absorbing $5.3 billion because on-chain data told them to be greedy. The information was always available. The blockchain is public. Anyone can see whale wallets accumulating. Anyone can see exchange supply dropping. But most people do not look. They watch CNBC, they read Bloomberg, they follow influencers who do not know how to read a block explorer, and then they wonder why they always buy the top and sell the bottom. Santiman's conclusion? They called this setup very bullish, their exact words. When whales accumulate and retail sells, crypto markets historically move in the direction of the whales, not retail. This is the game. It has always been the game. Money flows from those who panic to those who prepare, from those who react to headlines to those who read the data underneath. But wait, there's another layer to this, because supply leaving exchanges is only half the story. You need to understand where it is going. Analyst James Check released data this week showing a massive supply redistribution happening under the surface. The top-heavy supply concentration dropped from 67% to 47%. What does that mean in plain English? Bitcoin is moving from weak hands to strong hands, from short-term speculators who bought near the top to long-term accumulators who buy regardless of price. The distribution of ownership is getting healthier. The foundation is getting stronger. The kicker? Profit-taking among long-term holders has dropped off a cliff. The people who survived the October correction, the 30% drawdown from 126,000, they are not interested in selling at 92,000. They are waiting for much higher prices. Now, let me show you why this matters. For the next few months, when supply tightens this much, the market becomes a pressure cooker. Any demand shock, any catalyst, any sudden inflow of capital hits a wall of scarcity. The last time exchange supply was this low was early 2018. You know what happened next? Bitcoin consolidated for months, then began a new cycle that eventually led to 69,000. But the setup today is different, better. In 2018, there were no spot ETFs, no BlackRock, no Fidelity, no Morgan Stanley filing for Bitcoin trusts, no 11 trillion asset manager calling crypto infrastructure. Today, in 2026, institutions are not just watching, they are building, they are allocating, they are filing. And the supply they want to buy? It is not available. 200,000 Bitcoin locked in cold storage, 56,000 more absorbed by whales in 3 weeks, 13.7% left on exchanges. The math does not work in favor of sellers. It works in favor of holders. So what does this mean for you? It means the narrative you are hearing, that Bitcoin is stuck, that the bull run is over, that smart money has left, is backwards. The data shows the exact opposite. Smart money is accumulating at the fastest pace since the local bottom. Exchange supply is at 7-year lows. Long-term holders stop selling. Retail is panicking into strength. This is not bearish. This is the calm before the squeeze. Now, I am not saying Bitcoin goes to 100,000 tomorrow. Nothing is guaranteed. The market can stay irrational. There will be volatility. There will be shakeouts. But the structural foundation is as strong as it has been in years. The supply is locked, the whales are positioned, the redistribution is complete. The only question is whether you see the pattern or whether you become the liquidity that fuels the next move. So, what do you want me to cover next? Do you want me to break down which whale wallets are accumulating and show you their exact cost basis? Do you want me to track ETF flows daily so you know the moment institutions flip back to buying? Do you want me to compare this setup to August 2024 and show you what happened next? Or do you want me to dig into the realized price at 56,000 and show you why that level matters? Drop a comment and let me know. And if this gave you a framework when everyone else just gave you panic, hit subscribe because Friday's options expiry is going to move this market hard.